Hello traders, today is the 16th of August 2011 and happy trading to you all. The time in London is 30 minutes past 5 p.m. Okay, that's 12:30 p.m. Eastern time. London is now closed, but New York is still open. Okay, we have sold the Australian dollar US dollar currency pair at 104.90. Okay, 104.90, where I draw my horizontal line here, and stop loss 30 pip, 30, which means our stop loss is at 105.20, 30 pip, 30 stop loss. Always apply the stop loss to all trade, very important. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. Okay, for all trade we will use 5% money management rules, okay, and also apply stop loss in all trade, very important. Okay, yesterday we posted a video on YouTube on our channel www.youtube.com/George Trio, and the title of that video was live Elliott wave strategies. Okay, the title of the video that we posted yesterday was live Elliott wave strategies, and we were focusing on the Australian dollar US dollar currency pair, and we were talking about the Elliott wave theory and the market patterns. There is a difference between the market patterns and the price pattern. In order to master the subject of Elliott wave, one must master, okay, one must understand, okay, the subject of the market patterns. Okay, now I'm not going to go deeply into this subject of market pattern today, but I will just explain to you what's happening here on this 3-minute chart, my favorite time frame, because my name is George Trio. Okay, as a tree. Okay, now like this 3-minute chart, as I explained to traders before, when I was a new trader, I was making all my trading decisions on 3-minute chart. I was not looking at any other time frame, and I was using a system that I built with the stochastic and MACD, and that's why we have our website that we call stochasticmacd.com. Is connected to my crazy way of trading as a new trader, stochasticmacd.com. I was not paying attention to the price. I was following my stochastic and my MACD, okay, on the 3-minute chart. Now this is it. So this video, the title of this video is mastering, okay, Elliott wave theory. Okay, as always, we want to master Elliott wave because the market will move in 5 waves, okay, plus ABC corrective move. Okay, 5 movement, 3 contra trend. Okay, 5 movement, 3 contra trend always. So in total we count it, we have 8. Now you understand why we are so obsessed with the number 8. TSTWSY08, TSTWSY008, TSTWSY0008. Okay, now you understand why we are so obsessed with number 8. 8 is so important in this market. 5 movement in one direction, 3 movement corrective move, very important. 5 wave ABC corrective move. Okay, 1 2 3 4 5, 1 2 3, 1 2 3, 1 2 3 4 5. This is what the market is doing all the time. Okay, there are more to that, but we are not going to talk about that today. So we have a consolidation pattern here. The price was going up and down, up and down. Before a trend, very often the market will consolidate. It does not mean that when we see a consolidation there will be a trend. You can have a consolidation going on for months, okay, without any trend coming out. Okay, there are some financial instruments that continue to consolidate all year long. Okay, very important. So if you watch the video that we titled live Elliott wave strategy, this is the continuation of it today. That was yesterday. Okay, so I want to see what's happening with this Australian dollar US dollar currency pair we are selling, so we are expecting the price to continue the movement to the downside. So you can see we are putting a support level here. Some traders will take profit. They are not stupid, okay? Alright. So we have what we call a balanced market here. According to those who are using the market profile, we have a balanced market or a consolidation in this on this 3-minute chart. Okay, that was going on during the gap period. Okay, the gap period, as you can see, is when one market is already open, and when that market is open, another market is about to open. That's what we call the gap period. So you see, London was open first, and then we are waiting for New York to open, and the future traders will come into the market and do their messy things, and the market was waiting for New York to open. Okay, you see now, right here. Okay, here where I place my this one here, where I place my red vertical line, that's where New York did open on this candle here. Can you believe that? The price break the consolidation zone when New York was open. Here, right here. Okay, we're going to start again counting the wave. The first area wave is the wave that will break out of the consolidation zone. But it's also very nice if we see the first wave when a market is about to open. Whenever you see a first area wave when you are day trading, when a market is about to open, you need to pay attention. And right here we knew what's going to happen. This is the first area wave. Okay, from here it went out, it break. You see, the price was doing ups, down, ups, down, ups, down here, and then from here it did not stop. It just went straight. No more pullback, all the way out. This is the first area wave. Yesterday we did talk about what we call the complex area wave, when the first, the third, and the fifth area wave were divided into 5 small waves. This is a complex area wave. Today we do not have a complex area wave. We do not have a complex first area wave. The price went out straight away, straight out of the box, so to speak, and then a pullback here. So this is the first area wave from here up to this level here, and then a second area wave from here to this level here, and then we are expecting the third area wave to start. So at this point in time, if you were here, you will expect the third area wave to continue and go up like this. But something has happened here. As I told you before, when a wave is cancelled, now we are talking about a practical trading, not theory. You can spend your time reading books or going to webinar. I'm not saying that the books are useless. I'm not saying that webinars are useless. These are important things. But if the books are not telling you how to trade, if the webinar is not showing you practical, or it's not revealing to you the reality of trading, you may look for a better webinar or a better books. Very important. Okay, so the second area wave, this one here, from here to here, and then the price start going up. So we think, okay, this is the third wave beginning now, but look what's happened. Then the price retraces back now, cancelling this movement to the upside here. This movement to the upside has been completely erased. Okay, so we have to count again our third area wave. The third area wave did start here, was going up, but the whole thing was cancelled. So we're back again to square one. But our first area wave is still intact, and the second area wave was still intact, but the third area wave that went up, breaking the previous high here, was cancelled. So we start again counting our third area wave. So the third area wave now has started from here all the way up here. Now you see now, the theory of the area wave is different from the reality of trading area wave. If you pay attention carefully, what the price did here, the first area wave, the second area wave on this 3-minute chart, things are not perfect because we are on the 3-minute chart. It's not easy to count waves on a 3-minute chart. You can understand that because we are playing with market noise. Another trader may say, George, you are wrong here because this third Elliott wave is in fact from here. Yes, it's true, and it has been divided into 5 small waves. I disagree. You will say, so the first wave, second wave, third wave, fourth wave, and the fifth wave, or for this third Elliott wave. He or she may disagree with me. That's perfectly okay. Like I told you yesterday, if he or she make a trading decision based on his count or her count, and the trade happen to be a successful trade, that's perfectly okay. Alright, because we want to use the Elliott wave not for fun, not for excitement, but to make accurate a trading decision. So this somebody may say that the third Elliott wave has been divided into 5 small waves from here, here. So they will say first small wave within the third wave, second small wave. But you see, this movement down has cancelled the first one here. So we can't accept that. It's just completely wrong. This movement from here to this level here has been erased completely on the dot. Up, come back down, 0. It's like it didn't happen, okay? So it's like there is a gap here. We can erase it, okay? If we have a gum, we can erase this movement here and bring this price here back to here. So our third Elliott wave has started from here. Now, if you do not understand what I'm trying to explain here, you can go back and watch the video again. Do not worry too much about it, okay? Just watch it, okay? And think of it, okay? If it makes sense to you, that's okay. If it doesn't make sense to you, leave it alone, okay? So the third Elliott wave from here all the way up here, okay? So if I start again, first wave, second wave, we forget this gap here because it has been cancelled. Third wave from fourth wave, this is the fourth wave now, and the fifth wave right here has ended here. And then the price starts rolling down before we see this volatility here. This is what I call market exaggeration, market distortion. This can be caused by news, okay, volatility, okay, manipulation, other things, the reality of the market, okay. So we have 5 waves. First wave, second wave, because there was a cancellation here, third wave, fourth wave, and the fifth wave has ended here. Do you sell straight away because you are at the end of the fifth Elliott wave? 9. Okay, this is a bit of German for you. 9. Okay, no, we do not sell. Okay, we look for opportunity to sell. That's what we do, and we sell like a professional trader. This you see this candle here, the price went now all the way up here by being sold down. The price did open here but closed below it. That's not a sell yet. Usually the price will try to go back to where it went before, which is this one here. If that one also is bearish, it's telling her to sell. This is the language of the candlestick. You can go on Google or YouTube or Steve Nissen channel on YouTube and watch a video about Steve Nissen. He's the master of candlestick. I'm not, okay? So all this blah 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 here is telling me that something is going on. I want to sell, and I sold it right here. Went up, coming back down, sold here with a stop, a sell orders. So I have 5 Elliott wave. Then I receive reading the price. I notice there is a weakness here. I want to sell with a 30 pip stop loss. That's what I've done. At this level here, 104.90. Okay, the price went all the way down quickly to 104.54. Very fast. Okay, call it 40 pips very fast to the downside. I'm not closing this yet. I want it to go down. But if we look at the clock, that's what I'm saying to traders. When you are trading, there's a clock. The market has a clock. It's turning round, 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 and the clock will affect the markets. This one is the last indicator. Do not forget, it's not the best time to be trading now. You understand why? Because professionals are having lunch. Okay, so this is about learning to trade. Okay, so I hope you enjoyed this video also. Regarding, we will see a kind of ABC correcting move. So 1 2 3 4 5 1 2 3. Now you understand the 8, the importance of 8. 1 2 3 4 5 1 2 3. 5 wave ABC corrective move, or 1 2 3 and then 1 2 3 4 5. If I show you here, paying attention to the price itself, ladies and gentlemen, we mean business here. You see here, we are on a monthly chart. Decisions were not made on a 3-minute chart alone. You understand? Very important. That's why we are trying. If you are struggling with this, just keep doing it properly. Don't cut corners. Try to focus on it. If you are TSTW24 trader, TSTWSY08 trader, TSTWSY008 trader, just work on it. Just work on it. Your ability to trade, and just work on it. That's why we are saying to you, work on it. And I tell you, remember the first time you start learning to drive, okay, or you start playing a computer game, it wasn't easy. Remember that, okay? So this is what we see on the monthly chart. You see the part here, it displays what we call ABC, not ABC, ABCD chart pattern. ABCD. Momentum, bullish momentum, invitation to buy, people responded, same movement from here to here, same from here to here. Traders want to take profit. They are taking profit right now. Can you see it? For how many months? 1 2 3 4 5 months. They are taking profit here. I want to be selling. I want to give priority to selling. But when you are selling, you don't want to sell at the support level. Yes, the price going down, but there are some days going up. You see? But we are in overbought zone. If I want to be very, very bullish, I want a price to come above, to break above this red horizontal line, break above it and retest it. But I don't want to be bullish here. I want to be bearish. Does not mean that the price will go down every day. Some days you go up, some days go down. You see here, this on a daily chart, blah 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 blah, boom, down. Priority to selling. Okay. Today, what has happened for this currency pair? A very excellent currency pair. I will show you on the hourly chart. You can see for the Australian dollar, the day has started very bearish, but again, then it went up again. Now we again coming down. Okay. So if you want to sell, this is what you want. You don't want to sell it. If you want to sell when it's going down, you have to be very careful. You want it to come up and then give you opportunity to sell. So we were going down today, which means the bear were controlling the market. Now there is a bit of pullback because of blah blah blah. Now if you receive again an information to sell, we will sell because the market is controlled by the bear today. Now there is a bit of rally. Now again a signal to sell. I will sell. Okay. On the other hand, if the market is going up, okay, so it went up like this, blah 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 blah. So bulls are controlling the market. Now price come back down a bit. Okay, if I receive a signal to buy, I will buy because the majority are the bulls. Now you understand. If it's going down, it give you a rally, and then you receive a signal to sell, you sell because now you know who are controlling the market. So the bear are controlling the market to the downside. Then they give you a rally plus a signal to sell. Somebody is controlling the market, and then they give you their signal. So if you know who is controlling the market and you receive the signal of the people who are controlling the market, you're on the winning side. That's how you do it. So if the market is going down and then you receive a clear-cut signal to sell, that's a winning signal. If the market is going up and you receive a buying signal, that's a winning signal. But anytime you're buying, you pay attention to a resistance level. Suppose you buy right here in front of a resistance level, even though the signal may be correct, but you buy in the wrong place at the wrong time. The place and the time is the key for successful winning trade. This video is primarily for the TSTW24 traders and is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. First Elliott wave, second Elliott wave, third Elliott wave, a fourth Elliott wave, and a fifth Elliott wave. Now we are expecting the A, B, and C corrective move. Will the price display the ABC corrective move? We do not know. It may happen, it may not happen. We cannot guarantee that the price will do what the price will do, and we just keep our eyes wide open, following the price itself, the number one indicator. Thank you for watching, and we will speak to you very soon. We are the TSTW24 traders.